Welcome back to the Manor. Julian McBain here, and we are back on the Panleon hunt, which I forgot to grab the daily, but that's okay. And we're going to be talking about casualty insurance today. Sorry about this coming out later in the evening. I am recording this the day it comes out, which is very unusual for me. I ended up working on schoolwork till like 10 p.m. last night, and I literally had no spoons to record this, and Saturday was a mess. So I've got the next 4 days off, so I'm going to be able to get my stuff recorded. I should be able to get my stuff recorded, even though my Saturday's already been spoken for. And I've got some stuff going on Thursday evening, but we'll make it all work. So today we're going to talk about casualty insurance. And for those of you who aren't familiar, casualty insurance is also known as liability insurance. And we're going to kind of go into what those things cover and the difference between liability on, say, an auto policy versus a homeowner's or business liability. But before we get started, if you're new to the channel, welcome to the Manor. Please take a moment and subscribe down below. We are on the road to 13 million subscribers, one subscription at a time, so make sure you subscribe. Also, please consider going to patreon.com/JulianMcBain if you want to support my work. If you do, you'll get exclusive content. Working on the February monthly. I know it's due out this week because, well, duh. I will get that uploaded on time. Took 4 days off at the end of the week. How do you like them apples? Well, 2, technically. Because the weekend's already spoken off. But I will get that exclusive content out, and I'm going to start dropping the Boneworks raw footage so that my patrons can watch them. And it's all for $5 a month. And it supports my work here on the channel. So I really appreciate all the support of my patrons. Okay. Casualty insurance. Casualty insurance or liability insurance is insurance that covers you in the event you are responsible for something and get sued. Now, it doesn't necessarily mean it's going to happen through lawsuit. A lot of this stuff is settled out of court or the insurance pays out. But basically, this is your first line of defense against lawsuit is the big one. And we're going to start with auto insurance because actually, no, let's start with homeowners. That's simpler. And then we'll move into auto. So on a homeowner's policy, there are 2 coverages that really cover your butt if something happens. And someone gets hurt, especially. The first is medical payments. Again, this is based on the U.S. system, and I'm using the Vermont state-specific sets of laws, but they're pretty universal thanks to the Insurance Standards Office. Medical payments is a no-fault coverage that covers a person who gets injured on your property that is not a resident, or actually, no, it's just not a resident of that property. So you have a friend over. They miss a step that you've been meaning to fix, or the step breaks, they break their ankle, medical payments. $5,000 in most cases, it's $5,000. Pays out, no fault, and very little paperwork. You just submit the bill. Now, as we all know, because of inflation, medical bills are really, really stupid high. Well, inflation in malpractice insurance needs. So, and this is where this coverage really doesn't make sense for a lot of your other developed nations, because other developed nations have socialized medicine schemes, for better or for worse. And we're not going to get into the politics of that. But in the event that does not cover the total injury, or if you're sued for some other reason, personal liability insurance applies. Now, what does personal liability insurance do? It does a number of things. One, if it's due to injury, it pays for the medical expenses of the injury up to the limit of the policy. And I'm here to tell you, if you have less than $500,000 worth of personal liability insurance these days, it's not expensive. You're not protecting yourself. And honestly, I recommend $1 million. This is a recommendation I will go on record stating. I don't know what other companies or what other localities are. I know that in my state, my company, $1 million in liability on a homeowner's only increases the homeowners by $35 a year. I seriously mean that. And it's going to be comparable to what it is in other states based on what their baseline policy pricing is. So if the cost of insurance on a house in, say, New York is 150% of that of Vermont, the liability is going to be 150% of what the cost is in Vermont. But it's still not much. It's still not much. Even if you're paying $100 a year for liability insurance, $1 million in liability, something goes wrong, you're covered. And you'd have to really screw up for an attorney to go after more than $1 million on a lot of these things, or you have to be really stupid rich. You know, for the average middle class family, $1 million in insurance should cover you. Now, depending on where you live, consult your insurance agent. But this is one I feel fairly safe going on record for, because this is what I do every day. This is my job, and then I know how to protect people. So, anyway, it covers the injury, it covers the medical expenses. It also covers general damages. And you're like, well, what are general damages? The big ones are lost wages. So, of course, someone goes to the hospital. They're stuck in the hospital for 6 weeks. They have to make all that paycheck up. So, the insurance company collects past pay stubs or W-2s. They do the math on it based on the average earnings over the course of the 6 weeks that they're in the hospital or out of work. They pay for the replacement of salary. That's part of that as well. It's also why it's a good idea for you to have a disability policy. We're not going into that. The pain and suffering. Pain and suffering has a monetary value to it. And it's not firmly understood what that value would be. But it does have a monetary value. So, I thought someone had texted me. It wasn't nothing important. Pain and suffering does have a monetary value. And having that extra layer of liability to be able to pay out that pain and suffering is worthwhile. Especially if it's caused by, gross negligence. They're going to take you for all you're worth. Most lawyers, in my experience, will look at the liability on a policy, especially if it's got $1 million limit on it, and they'll just go for the liability insurance. Also, let's say one of your kids, let's say you're a parent, one of your kids commits a crime. Liability pays out the restitution. That happens. Kids do dumb things. And you want to make sure you're covered, because your kids are your responsibility until they're adults. It's just the way it works. And what does adult mean? That tends to be pretty flexible in a court. So, and again, not an attorney, not giving legal advice. But you need to protect yourself. So, there's your homeowner's version of liability insurance. Short and sweet. It covers you in the event you're responsible for something and you can't pay out. Oh, and by the way, the insurance company also pays for the lawyer to defend you. Yes. When it comes to liability claims, and this is something a lot of people don't know, because when they get sued, they panic. And this is why if you don't own a home, renter's insurance is essential. Because renter's policies, in the United States at least, a renter's policy is a homeowner's policy. It's a homeowner's policy that does not cover the building. In insurance, the word homeowners actually refers to two separate things. You have the homeowner's insurance policy, which covers a home you own, and you have the category of insurances classified as homeowners, which include homeowners, renters, condo unit owners, and manufactured homes. And yes, manufactured homes and homeowners are not the same. They're nearly identical, but the perils covered, the actual things that are insured, are different. And the way it pays out is different, especially if you own an older mobile home. Talk to your insurance agent to find out if it's a replacement cost policy or an actual cash value policy. Because you don't want to get caught with an actual cash value policy when you think you've got a replacement cost. You live in a trailer, and I'm not dissing living in trailers. I've lived in several, and some of them weren't in great condition. Actually, when I lived in Glendive, Montana, despite the fact that the landlords were of questionable repute, it was a pretty nice trailer. It was a 3-bedroom. We only paid like $350 a month for it. Natural gas heat. We paid almost nothing for utilities. It was an amazing place to live. Except the heat tape's a bitch. That's why I don't ever want to live in a trailer. It has nothing to do with the fact, the quote-unquote stigma of living in a trailer. I never gave a shit about that. I ain't never fucking crawling underneath a trailer and doing heat tape ever again. If I can get... They want to offer me a double wide and drop that son of a bitch on a foundation with, you know, an actual basement, I'd definitely consider it. They want to put it on a pad with skirting, not doing it. No. Okay, sorry, tangents. So, renters. It is if you rent your home, whether it's a house or an apartment, an efficiency, I don't care. One, renters is dirt cheap. If renters cost you more than $15 to $20 a month, find a different insurance company unless you're in New York City. New York City, I'm not going to speak to because New York City is its own ecosystem. But the most expensive renter's insurance I've ever seen is like $15, $16 a month. And again, there are going to be places where it's more expensive, like New York City, like San Francisco, like LA. And you might pay $20, $25 a month. Still worth covering your ass with it. Trust me. And don't forget, it covers more than just, remember the property section? Covers more than just your liabilities, covers all of your stuff. This is the liability portion we're worried about today, and medical payments is on the renters too. So, liability insurance. Pays out if you're responsible for an injury, pays out if someone sues you, pays out if you owe restitution, assuming that you are not... It's restitution you're responsible for that you did not deliberately commit. Minor children don't count. If your minor child does something that owes restitution, they can often go after your liability insurance. And more often than not, depending on the contract and the company, it would not be surprising if they paid out. It would not be surprising if they denied it, but it would not be surprising if they paid out. And they pay for the lawyer. The insurance company it's in their best interest to defend you to the best of their ability. So the insurance company has the right to select the lawyer because the insurance company pays for the lawyer. And they will defend the case. They'll often try to do things out of court because that's a lot cheaper for everyone. And it also pays for court costs in the event you lose. So these are all important things to know and have. And again, check with your insurance agent in your state or country. Different states and countries work a little bit differently. Generally in the United States, this is how it works. If you're outside the United States, I'm sure that it's very similar, but you're going to want to check on those nuances because every country is different. Every state in the U.S. is different. And I'm going to tangent here for a second on purpose. Everyone seems to think outside the U.S. that we're like one big unified country. We are not. We are not. And I did a whole video on it somewhere. I think it was in the Julian McBain show. Somewhere in the past, you can go watch it. The U.S. is 50 semi-sovereign states that have all their own laws, and insurance is regulated at the state level. And the funny thing is, there are a lot of state laws the Fed can't supersede. 10th Amendment of the United States Constitution. Look that shit up. Okay, back on topic. Auto insurance liability. Auto insurance liability is split into two categories. It works very similar to the way homeowners liability does, but when it takes effect is very different. So auto insurance liability is generally split into two categories: bodily injury liability and property damage liability. Most of these liabilities in many states and jurisdictions are expressed as what they call split limits. This is not always the case. A split limit will be expressed as 100/300/100. What the hell does that mean? Or I'm sorry, first off, those are always in thousands of dollars. So it's $100,000, $300,000, $100,000. And they can go up to like a million. They do that. I have sold policies like that. What it is the first number is bodily injury liability per person. $100,000 per person will be paid out on bodily injury. The middle number, the 300, is the bodily injury payout per accident. The insurance policy will pay up to $100,000 per person to a maximum of $300,000 for the whole accident. So if you've got a person with $120,000 worth of injuries and another with $40,000 worth of injuries, $40,000 is fully covered, 120,000, you're gonna have to figure out where that extra 20 grand's coming from, because that's on you. And that's the way it works, by the way. If your liability limits run out, the rest is on you. It doesn't just go into the ether, it doesn't disappear, and it's not on the victim or the person who was wronged. That's on you, which is why liability and casualty insurance is so damned important. The third number is property damage liability. You damage their vehicle, 100,000 in property damage liability repairs their vehicle. So, 100,000, 300,000, 100,000. Now, sometimes you'll see on a policy a single number for that set of coverages. It's known as a combined single limit. And usually that combined single limit tends to be rather large, and it needs to be. I've never seen a combined single limit policy of less than $300,000. More often it's $500,000, and just as often it's $1 million. What that does is, instead of having the whole split limit thing, it gives you one big pool of money to deal with all liabilities on a claim. So what's the benefit to that? One, it's not trying to determine, well, if someone has a $120,000 injury, the $20,000 is going to be hanging out there. No. If you've got a $500,000 combined single limit, someone has $250,000 in injuries, and a person has $20,000 in injuries, you know they're covered. Period. Because there's no individual limit on it. But be cautioned, because that also means that there's no separate pool for property damage versus injury. If you're going to do a combined single limit, $500,000 is a minimum, $1 million is recommended. And especially now, first off, medical expenses are out of control. Like completely out of control. I'm sure doctors would agree. And they're the ones getting paid by these bills. Two, it doesn't take much for that type of money to pile up. You know, icy day, especially if you live in the north. You know, icy road conditions, heavy traffic, suddenly you cause a pile up, people get injured. That's going to eat through that pool really, really quickly. It is. Property damage especially, because it's not the injuries that's going to be the big issue. If you're in like a 4 or 5 car pileup, oftentimes those pileups are actually fairly low speed. Been in one. But what happens is you have 5 vehicles to fix now. If you've got to fix 5 vehicles from a 25 mile an hour 4 car pileup, do you really think you're going to be able to pay it out with $100,000? Well, maybe. But with the price of vehicles these days, maybe not. And case in point, Jeep just put out its first $100,000 vehicle. Jeep. And they're basically like the rough and tumble utility group. How do I know this? I'm a Jeeper. I drive Jeeps. Which I was actually told by a friend that we were discussing things, because she had rented a Ram while her car was in the shop. And she's like, I want one of these so bad. And I'm like, I drive a Jeep. And she goes, you don't own a Jeep. The Jeep owns you. I'm like, okay, fair. But yeah, so if you're going to do combined single limit, which is not necessarily a bad thing, it's not, make sure the limits are high. And again, it's one of those where better safe than sorry, because again, anything that doesn't come out of the policy comes out of you, and they're going to get the money from you somehow. They're either going to get it out of your bank account, force you to sell your assets, or they're going to garnish your check. And they can garnish your check forever if necessary. They will do it. And so that's why these things are so important. Insurance is your defense. Casualty insurance is the biggest part of the shielding part of insurance. It protects you from when things go wrong, and it's your responsibility. Technically speaking, it protects others from you causing financial loss, is what it comes down to. But it protects you from financial loss from something you accidentally caused. So that's all I got. Thank you for watching. Thank you for listening. Please like, share, and subscribe down below. We are on the road to 13 million subscribers, one subscription at a time. So make sure you subscribe. And as always, I really appreciate all the support, and we will see you in the next one.